welcome back to the third episode of our State of Crypto webinar. My name is Hansen, I'll be your host today. And on today's episode, we'll have an exciting update on last week's market movements from our researcher Lanre Ige, followed by an introduction to one of the most prominent cryptocurrencies besides Bitcoin, called Tezos, given to you by Mr. Davide Vicini. We're all here for the content, so I won't waste too much time on a lengthy intro. Just real quick for all the newcomers, welcome on behalf of 21Shares. We are the first issuer of fully collateralized listed crypto ETPs. If you take a look at the next slide, here's an overview of all of our listed products. I can share with you that we've actually seen an increase in demand for crypto products since the coronavirus happened, especially from the retail markets. So you see here, we have a total of 11 ETPs, which is a complete suite of instruments for anyone who wants to get exposure to the overall market or individual currencies, or even benefit from downwards price movements in crypto. All that in a plain vanilla traditional ETP structure. So if you'd like to learn more about our products or have questions on the crypto asset space in general, please reach out to Ms. Sina Meyer, who heads business development here in Switzerland. Now, before kicking off today's webinar, let me give you the quick fun fact of the day. Last week, on the 10th of April, someone transferred 160,000 Bitcoins, which is worth around, I think, 1.1 billion US dollars for a fee of just 68 cents. Yeah, someone paid 68 cents to send $1.1 billion from one account to another one. And the whole transaction took one block, so maximum of 10 minutes. Now, the interesting thing here is, why do I know about this, right? Why do I know about a random transaction from some company or person? In fact, this specific transaction wasn't some large public M&A deal which was in the news. It was literally an internal transaction from one wallet to another from a major crypto exchange. And the reason why I know about it is because I saw it on Twitter, where someone else saw it. The reason for that is that every single transaction on the blockchain is completely transparent, which is quite cool, actually. So yeah, that was a quick fun fact of the week. Let's start this week's webinar. If you have questions, on the bottom in the middle, there's a Q&A section. You can write your questions, others won't see it, and we'll answer all questions at the very end. The more questions, the merrier. So with that being said, thanks for participating, and I'm going to hand over now to Mr. Lanre Ige for the market update.
Thank you, Hansen, for that. So today I'll deliver the market update, just give a quick summary on how the market has moved over the last week, and then also talk about the main driver of the market movement, which has been the halving for Bitcoin Cash, a spin-off of Bitcoin on April 8th, 2020. So as you can see across the board, Bitcoin, Ripple, ETH, Bitcoin Cash, and Bitcoin SV, the market hasn't fared extremely well. Kind of the best of the worst performing assets was Bitcoin with a price drop of around 6.68%. And then the worst of the bunch was Bitcoin Cash, which went down by as much as 16.71% over the last week. Over the last day or so, Bitcoin especially has risen by a considerable amount, almost 5, 6, 7%. And we can see some of these crypto assets start to pick up, given, as well, we'll explain, the outcome of the Bitcoin Cash halving is nowhere near as pessimistic as the past week's returns may suggest. I guess the other data point I want to focus on, since the others haven't changed as much, is BTC trading activity, according to Coinbase, is 80% skewed towards buy and 20% skewed towards sell. For those that have attended previous sessions with us, you would know that normally this would range in the 60 to 70% mark. So the fact that it's reached as high as 80% is a suggestion that increasingly a number of retail investors are getting bullish on buying Bitcoin, especially given the slight price divergence over the last week. So now onto Bitcoin halving, the Bitcoin Cash halving. What happened? So the best way to understand what Bitcoin Cash is, as opposed to Bitcoin, is by thinking about what would happen if a company like Amazon decided to have a merger, decided to have a spin-off. So you have Amazon, and then Amazon decides to spin off AWS as a separate company, which would also be publicly listed. These are two separate companies in the same way that Bitcoin and Bitcoin Cash are two separate cryptocurrencies. But in a similar way to Bitcoin, Bitcoin Cash underwent a halving, where the amount of Bitcoin Cash created every single block halved from 12.5% to 6.25%. And this occurred on the 8th of April, as we can see in this chart. So what happened and what is the consequence of this? I think this is an extremely important thing to focus on. And we as a whole company think that looking at past data is a very good way to understand what could potentially happen for the upcoming Bitcoin halving on May the 13th, given that Bitcoin Cash and Bitcoin have similarities. As you can see, we've talked a lot about hash rates we talked a lot about Bitcoin mining and hash rates in previous examples and previous sessions. And this chart shows an index of Bitcoin Cash's hash rate from the start of the year up until the 15th of April. And as you can see, on the 8th of April, Bitcoin Cash's hash rate was half of what it was on the 1st of January. And the reason for this, as we've explained in previous times, is the fact that as the halving occurred and the amount of Bitcoin Cash a miner could get reduced, miners have decided to deviate from mining on Bitcoin Cash to mining on Bitcoin, since they can do so with the same equipment. And you may ask, what is the data that supports such an argument? So this next graph shows Bitcoin's hash rate. So Bitcoin is the cryptocurrency that everyone is familiar with. It's the one that we talk about a lot because it's by far the largest and most prominent cryptocurrency. And its hash rate figure, so just to remind you guys, the figure which explains the amount of computational power that is being used by miners around the world to solve these difficult lottery equations, which allow them to mine new blocks. That hash rate figure is up by 9% since the start of the year. And increasingly, while there has been a lot of volatility, if you focus exactly on the 6th of April, so the last tick marker, Bitcoin's hash rate has increased from a hash rate index score of 80 to over 110 around the period of the Bitcoin Cash halving. This suggests, as we show on the next slide, that a number of miners decided to switch, as I said before, from Bitcoin Cash mining to Bitcoin mining. And why exactly is this interesting? So a lot of people are wondering, so what is going to happen in the upcoming Bitcoin halving? Is the Bitcoin price going to go up or is the price going to go down? And our belief, as we've described in the first webinar, is that in all likelihood, Bitcoin's fundamentals are not going to be massively changed following the Bitcoin halving on May 13th. And this is because Bitcoin's fundamentals are intrinsically different from smaller cryptocurrencies like Bitcoin Cash. So whilst in Bitcoin Cash's case, a large amount of miners switched over to Bitcoin because the Bitcoin market for mining is much more robust and can act as a safe haven. Since you know that a Bitcoin is always going to be worth something substantial going forward. And so if you mine a Bitcoin, you can be quite happy despite the fact there will be some volatility. With Bitcoin Cash, given the price is much more volatile and has gone up and down much more, Bitcoin miners of Bitcoin and Bitcoin Cash have much less faith in the long-term value of a coin like that. So given that most other Bitcoin spin-offs, such as Bitcoin Cash or Bitcoin SV, have already been through their halving events, it is extremely unlikely that we'll see a similar effect of Bitcoin miners switching their mining machines off, because one, this event is already known way in advance, and two, they don't have any feasible alternatives to mine in the same way they did for miners that switched from Bitcoin Cash to Bitcoin. So I think the takeaway from this and from this Bitcoin Cash halving, and we ask, what can we learn going forward? And how does this impact our expectations of what is going to happen for the Bitcoin halving, is that we think, given Bitcoin's strong mining fundamentals, it is unlikely we'll see the same thing that happened to Bitcoin Cash happen to Bitcoin. Miners are unlikely to switch away from mining Bitcoin despite the reduce in block reward. And this ensures that in the long time, the Bitcoin's fundamentals and Bitcoin's mining competition will likely remain the same, insofar as the Bitcoin price, stays within the trading range over the last 2 years or so. And I think I can finish on this slide before I pass it on to my colleague Davide. On average, a Bitcoin block is a Bitcoin block, and a transaction is verified on Bitcoin every 10 minutes. Bitcoin Cash's average time to mine a block or to validate a transaction, as a result of the halving, briefly increased from 10 minutes to over 26 minutes, while Bitcoins remained exactly stable and even discounted and decreased a little bit. This is just another anecdote which helps show that the fundamentals of the two crypto assets are different. we're unlikely to see a similar thing happen with Bitcoin, given that even in times when the hash rate has decreased substantially because of outside outlier dynamics or changes in macroeconomic conditions, we haven't seen Bitcoin's block time or average time to complete transactions increase by the same amount as we saw for Bitcoin Cash. So I think this should just be a good way to better understand what is likely to happen with Bitcoin following the halving. And we don't expect there to be any substantial fundamental changes in either direction for Bitcoin come May 13th.